evening, guys. Let's get started with the new standard for today, that is IAS 20, accounting for government grants and disclosure of government assistance. Okay. By looking at that standard name, what comes to your mind, sir? Accounting for government grants, they are saying. So what does it mean? What is coming to your mind by hearing the term government grant? Any pop in your mind? The company is receiving something from the government. Fair enough. It could be cash, or it could be check, or it could be some asset, something they are receiving from the government. Fine. But if you just check, sir, normally company pay tax to the government. Yes, sir. So companies pay the amount to the government. But here, is it that way or it's other way around? It looks other way around. Accounting for government grant, meaning government is giving something to the company. Yes, no? That means we are lucky, we are getting something. Yes. So, if you are receiving something from the government, how the accounting treatment should be done for that? How you should measure, when to recognize, how much to recognize, where and all disclosures you need to give, how you need to present them. All that particular aspect IAS 20 covers. Fine? So, first of all, why will government give us anything, sir? Now, if you just check, COVID is a perfect example now. Many companies, especially airline industry, hospitality industry, are they doing well, sir, or are they doing horribly wrong? They are in the worst possible scenario, yes, that you could think of. Yes, can they survive? Now, airline they are saying only 50% capacity you should run. First of all, most of the airline companies are finding it difficult to break even. They are making loss. Now they are telling only 50% capacity. That means airline will further face more loss. Can they go on like this? That means government has to intervene and give some relief to them. Yes, no? So if you are getting some relief from the government, okay, that we call it as government grants. And how to account that or how to treat that is what this particular standard talks about. Fair enough? To every person, government will not give a grant. There will be certain criteria. If you fall into that particular criteria, you may get the grant from the government, or you may get something from the government. If at all you are getting, how we should account is what this particular standard deals on. Is it okay? Alright, first is the definition, sir. Government grant is nothing but what? It's nothing but some assistance received from the government. Government grant is nothing but assistance received from the government in the form of what? Transfer of resources to the entity. Meaning, entity is receiving something from the government. Hence, we are saying transfer of resources to the entity. But government will give left, right, center benefit to everybody, or they put some conditions. They'll always put some conditions. So, for the past or future compliance of conditions. So, government will have some measures. So, they'll have some scheme. If you fall under that scheme, you will get some grant or money from the government. Done. That we call it as transfer of resources. Fair enough, you may get some cash from the government, or you may get some asset also, could be anything. Fair enough. Or if you want to look at another example, recently new state Telangana was formed. Correct? No. Now let's say Reliance, Mr. Mukesh Ambani, he approached Telangana state chief minister and told, I will set up a factory in Telangana. Due to that factory, 40,000 jobs I can create. Huge factory I will set up. Because of that factory, how much employment I can create? 40,000 employment he is saying I can create. What will Telangana chief minister tell now? Oh, please come. I was looking for players like you only. Yes or no? Correct? Now, Mukesh Ambani is also smart. One question he asked Telangana government, what's in it for me? Why should I come to your state? I can go to Gujarat, I can go to Karnataka, I can go to Tamil Nadu. Why should I set up my plant and create that employment opportunity in your state? I can create it in Maharashtra itself. Correct? No? Now Telangana government said, no problem, boss. Come, I will give you 100 acres of land. Actually, market value of that land is 100 crore. I will give you that land for 10 crore rupees. Telangana government told Mukesh Ambani, 100 crore worth of land, I will give you how much? Worth 10 crore. This is your government grant. Understanding it? Fair enough. So, this standard deals with how to account such grants. Fair enough. Asset received as grant, your F7 syllabus is not covering. Maybe it will be covered in SDR. Okay, here government grants will only cover cash received from government. Some cash assistance that you are receiving it from the government. Okay, so far, definition is clear. Can we go over the definition once again? Government grant is what, sir? It's a assistance received from whom? The government. In what form? In the form of transfer of resources. To whom? To the entity. Fair enough. Free of cost, or there will be some conditions. For past or future compliance of condition. Maybe company has already complied with the condition, hence government is giving a grant, or the government is telling, in future way you fulfill these conditions, take the grant now only. One of that conditions could be like, now Telangana state government may tell Mukesh Ambani, you should not close your factory for the next 10 years. Because it so happens that we set up a factory. After 3 years, Mukesh Ambani said, I will close the factory. Would it work for the state, Telangana state? No, Telangana state will put some condition. They may say, you should not close down the factory for 10 years. You should not. Mukesh Ambani, you should be the director of that, or you should be the managing director of that Reliance group for 5 years. You should create 40,000 employment by the end of 5th year. Okay, fair enough. Like this, they may put 101 conditions. So you are getting a grant because of conditions compliance. Already company have complied with the condition, or they will comply with the conditions in a future. That is what is nothing but government grant. Is the meaning of government grant clear for everybody online? Easy? Okay, sir. So does this, the standard has 2 parts if you just check. What are they saying? Accounting for government grants and what, sir? Disclosure of government assistance. That means there are 2 things here. Government grant as well as government assistance. Government grant ka meaning we got to know. Yes. Next thing is what? Government assistance. What do we mean by government assistance? Sir, simple. Now let's say like, Yadiyurappa, Karnataka state government, okay? They want to improve the business. They want more business to start up in Karnataka state, alright? Yadiyurappa government approached, or he made an open statement saying, fair enough. Now if you want to start any business, you need to get ROC registration. Like this, you have to take many permissions from many government departments, yes, no? Correct? Yadiyurappa government told, I will clear, suppose there is one startup, let's say, technological startup, they want to set up in Bangalore. New startup, they want to start in Bangalore. Yadiyurappa government told that particular startup, if you start your business in Bengaluru, fair enough, I will clear all your files in one department. You don't have to go to 101 departments to clear your files. All your clearance I will give you within 1 day. Or I will clear all your files within a particular department. One department, if you approach, they'll clear all your files. Fair enough? This is nothing but what? Is government giving you any money here? No. They are helping you what? To set up your business sooner. Correct? No. This is nothing but government assistance. This could be speedy clearance of files, administrative help, anything like this. Can you put a value for this assistance, sir? Can you find out the value? Government gave you 1 lakh cash. What is the value of the government grant? 1 lakh. Now, government is clearing your files sooner. Normally, it takes 1 month to clear the files, but government is clearing your files within 1 day. Can you find out the value of that? Not possible. Yes, no. So, government assistance ka value you cannot quantify. You cannot find out its value. Hence, you don't do any accounting treatment. You only disclose because you cannot find out the value. Because in accounts, if you want to pass any journal entry, you need to find out the value. Yes, account runs on money measurement concept. Yes. So, if you can measure in monetary terms what is the value, we can pass journal entry for it. All this speedy clearance, administrative help and all, can you find out its value? Not possible. Okay, they are also government grant only, but can you find out its value? No. Hence, we call such things as government assistance and we give a disclosure of them in notes to accounts. Meaning government has helped us in so and so ways. Like this, we give a disclosure. That's all is this particular first definition. So, we learned government grants and we learned government assistance. Any doubt in this particular section? A very small standard, but we'll go a little slow and understand everything in detail. So, first portion, everybody is okay? Can I get to the next section? Alright, second section is recognition criteria. I told standard deals only with 4 things. What is this? Recognition, measurement, presentation, disclosure, or classification, disclosure. Yes. Now we are looking at the recognition criteria. You remember recognition criteria of PP? What was the recognition criteria of PP? Web and cost measurement. 2 criteria as you had. For government grant also there are 2 criteria, sir. If you want to account for that government grant, 1, you should be reasonable assurance, or you should have a reasonable assurance that 1, you will fulfill the conditions. Government will not give you a grant at free of cost. Generally, they put in some conditions. Conditions could be anything. Create this much employment, or don't shut your factory for so many years. Like this, many conditions they may put forth. 1 organization or entity should have a reasonable assurance that they will fulfill those conditions. It's not necessary they should have already fulfilled. They should be reasonably sure now that they will fulfill those conditions in future. You have a reasonable assurance about that. Alright. Second one, grant, you should have a reasonable assurance that the grant will be received. During elections, government will make huge big statements. We will give you 1 crore, we will give you more, we will send you to Pluto. Correct? No, everything they will say. Will they fulfill all those things that they make, those promises will they fulfill up? Not possible. So, government grant should not be like this. You should have a reasonable assurance that 1, you will fulfill the conditions, 2, you will receive also the grant from the government. Okay, once these 2 conditions are satisfied, you can go ahead and recognize the government grant, meaning you can pass the journal entry for government grant. Fair enough? This we call it as prudence principle. Manageable. So far, okay? These two conditions we call it as prudence principles. For government grant accounting, there are two general principles, sir. One is prudence, another one is accrual. Like here, let's take a small example maybe. There is X Limited. There is a government. Government told X Limited, I will give you $1 million. I will give you $1 million. Provided you create 10,000 jobs in the next 3 years. Government is saying, I will give you $1 million as grant from my end if you create what? 10,000 jobs. Or government gave a grant of $1 million to X Limited now today, and they're saying in the next 3 years you need to create 10,000 jobs. If you don't create 10,000 jobs, you have to refund that grant whatever you have received. That is what is the government condition. This is okay, sir? Fair enough? So here, is there any condition? Yes, condition is what? Creating 10,000 jobs. In how many years? 3 years time. Sir, to satisfy this condition, should X Limited incur any cost? To comply or to fulfill this condition, should X Limited incur any cost? Sir, creating 10,000 jobs means what, sir? Correct? No, you need to take Naukri, Monster, like these websites you need to take. You need to hire your HR peoples. They need to call. You need to take people means obviously people are like now you people have come join the academy. Just like that you came off. Even we had to put efforts, no? Correct? We had to collect your data, we had to call you, we had to convince you, come we are also good and all that. Some we had to do yes or no. Yeah, initially. So that means there is a cost involved in all this. Correct? Fair enough so far? So what they are saying is 1 million you are receiving from the government. It is an income. Yes. No? At 1 million which X Limited received from the government is an income. Correct, no sir? Correct. To get this income, should X Limited incur any cost? Yes. There will be some cost that X Limited has to incur to get this grant. Yes or no? Correct. So they are saying the income should be matched with expense. Since the cost, you will incur cost over how many years? Sir? 3 years. That means don't book this income in this year P&L only. Because this income you have created and to fulfill this conditions, you will incur cost for the next 3 years, no? So income also you recognize over 3 years. This is your accrual or this is your matching concept in a way. Fair enough? Basically match the income with expenses. So far good? This is another principle which we follow in accounting government grants. Prudence, another one is accrual. Fair enough? So match your income with the expenses. Got it so far? Suppose instead of 3 years, government told jobs you need to create over 5 years. Can you then tell me what would have been accounting treatment? Instead of 3 years, if it was 5 years, then what? This 1 million income, will you recognize immediately? Or over 3 years? No. You will recognize now 1 million over 5 years. That means how much you will recognize every year? 1 million divided by 5, which will be 0.2 million every year you will recognize. Like that. That principle is nothing but your accrual wala principle. Matching the grant with the expense incurred for compliance of conditions. Fair enough? If there is no conditions, now let me modify this example slightly. Government told, hey, X Limited, take $1 million. X Limited asked why? Government told, you already created 50,000 jobs already. I am very happy with your performance. Take $1 million. Now, is there any future compliance of condition or condition is already complied on? Now this time around government is giving you grant for what purpose? You already created the job. That is the reason they are giving it. Yes or no? Now should you wait? Now there is no cost. That means entire $1 million can be booked in P&L right away. So that's how you need to check. Fair enough? The income should be matched with conditions compliance. If condition is going to get complied in future, the income also should be recognized over that duration. If condition is already fulfilled means income you recognize right. That's all is a simple funda of this accrual principle. Matching? Okay? Any doubts or okays? Offline or rather online? Any confusion? Can I move on, sir? That's all. We have only 3-4 concepts. 1 or 2 we have done. Another 2 or 3 we have. Can I move forward? A response would be nice. Yes. Somebody is saying yes. Okay, I'll move on to the next one then. Alright, sir. There are 2 types of government grant. As far as government grant is concerned, there are 2 types of government grant. One is revenue grant. Another one is capital grant. One is revenue, another one is capital grant. So revenue grant means the grant that you have received to train the employees or hire employees, etc. etc. Fine? Alright. So this grant, grant is an income, correct, no sir? If you are receiving something from the government, it's an income, yes. They are saying revenue grants can be shown separately as an income in statement in SPL. You can show this grant separately as an income, or you can deduct it from the respective expense. Like, what do I mean by this? Alright, let's say here, sir, take the same example. Here government gave how much grant? $1 million. With what condition? You need to create 10,000 jobs in the next 3 years. Yes, no? Sir, if you are creating 10,000 jobs means, can you hire people left, right, center and just keep it like, keep quiet, or you need to pay them salaries? If you are hiring 10,000 people, you need to pay 10,000 people ka salary also. Yes or no? Correct? So this grant, you can show it. How much is this grant, sir? $1 million? You can show it as a separate income in your SPL. You can book it as a separate income, or to this 10,000 people you are paying salary. Let us say to this 10,000 people you are paying a salary of $10 million. To these 10,000 people whom you hired, no, you are paying a salary of how much? $10 million. Sir, you are paying salary to employees means it will come, no? You will book it as an expense, correct? Don't book the expense as $10 million. Reduce. How much income you receive from the government? $1 million. So you show this expense at $9 million. Either show the grant as a separate income or reduce it from the respective expense. Companies are free to do whatever they want. Fair enough? Identify whatever it is and give a disclosure that this is what we have done. That's all as a funda. Is this portion clear? Yes. That is what we mentioned here for the government revenue related grants. Fine? If you have any doubt, I'll wait up, else I'll move on to the next. No doubts? Okay. Second one is capital grants. Capital grant means, okay, let me take you a small example here. X Limited, sir. Fine. They purchased a plant and machinery for $1 million. They purchased, or maybe let's take it as full value only, so that it will be easier, for 10 lakhs. Okay. X Limited has purchased a machinery worth 10 lakh rupees. After X Limited purchase, no, government gave a grant to X Limited. Since X Limited purchased a plant and machinery, government gave a grant of 1 lakh rupees to X Limited. Is this okay? Government, X Limited wants to open a factory, sir, in a remote village. Okay, in a remote village, they want to set up a factory. Sir, if you want to set up a factory, if that factory has to run, means you require machinery, no? Let's say to buy that machinery, it will cost 10 lakh rupees. Government told, no problem. I am very happy with your initiative that you are setting up this factory in a remote village, because of your initiative, the village ka economic conditions will improve. No? Hence, government told, I will give you a grant of 1 lakh rupees. Since you purchased this machinery, I am giving you a grant of 1 lakh rupees. Fine. This we call it as capital grant. Why? Sir, this plant and machinery purchased, is it a revenue expenditure or capital expenditure? This plant and machinery purchased, it's a capital expenditure. For that purpose, you have received the grant. Yes or no? Such grant we refer to it as capital grants. If you are receiving any grant on purchasing a capital asset, that capital asset could be machinery, furniture, intangible asset, whatever, tangible, intangible, doesn't matter. You know? If you are purchasing any capital asset, and because you purchase capital asset, if you are getting any grant, such grant we call it as capital grants. Manageable. Did you understand the term, meaning of the term capital grant? Okay. There are two possible ways in which you can account capital grants. One is asset cost reduction method. Another one is deferred income method. Let's do one thing, or else we anyway learned revenue grant here. No? Yes. One question we will solve off. We learn this funda, no, whatever I've written here, through problem only. It will be a lot easier. We'll do the problem and then we'll read the words. That time the words will be a lot more clear. Is it okay? Maybe I think that will be easier way. Okay, let's take up one question, sir. Simultaneously we'll do all the questions and it will be easier. I think handout must be given to you. Yes. So yes, taking up the first question. An entity is given 600,000 on 1st January 20x1 to keep the staff employed within the deprived area. Okay, you tell me, sir, whether it is a revenue grant or capital grant by looking at that sentence. Government is giving you $600,000 for what joy? To keep the staff employed within the deprived area. They have hired some staff, hired some employees. The government is saying you should not fire them from your job. Keep them in the job. For that, if you do so, I will give you a grant of $600,000. So you have received this grant towards capital asset or what? Did you receive this grant towards any capital asset? No. That means what is the nature of this grant? This is a revenue grant. Yes, sir? Because you're not, you did not purchase any capital asset and you did not receive any grant. Yes, no? Yes. So this is a revenue grant of how much? $600,000. The entity must not make any redundancies, meaning they should not fire any employees for the next 3 years. So government is giving free of cost, or they put some condition. There is always an asterisk mark. What is asterisk mark here? You should not fire them for the next 3 years. That is the condition. Yes, no? Or the grant will need to be repaid. If you fire any of the employees, then whatever government grant the government has given, they will take it back. Fine? Alright. By December 20X1, that is the first year end, no redundancies have taken place and none are planned. Sir, I told there are 2 conditions for government grant. What is that? 2 recognition criteria. 1, there should be a reasonable assurance that you should receive the grant, and there should be a reasonable assurance that you will fulfill the conditions. Did you already receive the grant? Yes, you already received. So reasonable assurance, total assurance we have got because we have received the grant only. 2, they are saying we did not fire any employees in the first year and none are planned, meaning we are not planning to fire any of the employees in the next 2 years. That means, is both the conditions getting satisfied? That means, can you go ahead and recognize the grant? Yes. Okay. Now means 1 is sure now, we can pass journal entry for grant. Yes. The next question is, sir, grant is an income. Yes. No? Now the question is, should I book this entire 6 lakh in this year's income or should I defer it? Should I book it in current year only or should I defer it? Defer it. For how many years? 3 years. Why 3 years? Sir, why did the government give you a grant? Because you need to what? Keep the employees in their job for the next 3 years. Yes or no? If you're keeping them in the job for the next 3 years, you need to pay salary. Yes or no? Correct? So condition will last for how many years, sir? Here the condition will last for 3 years. So the grant also will be recognized for 3 years. How many years the condition is getting fulfilled? No, that many years you will defer the government grant. Manageable. If condition is already satisfied, then you don't have to wait. Entire income you can book it in the current year only. If condition is already fulfilled or conditions will be fulfilled over 3 years. Here conditions will be fulfilled over 3 years. Hence grant also will be recognized over how many years? 3 years as such. So they have written it in words. Can I give you the journal entry? The journal entry, if you want to pass is, you have received some money, no sir. Generally grant and all will be received in your bank account. So bank account debit. How much grant did you receive? 6 lakh. Can you entirely transfer the 6 lakh to current year P&L only? No. You need to defer it, yes. So you can open a separate account known as Deferred Grant Income Account or Deferred Government Grant Account. Any name is okay. Each books use their own names, that is fine. So bank account debit to deferred grant or deferred government grant account 600,000. This is your first journal entry you will pass when you receive the grant. Manageable? Or maybe I'll do a thing. I'll pass it like this. This is for I'll pass it for all the 3 years so that you will have a complete idea. I'll pass it in columnar format. Is it okay? So that you'll have an idea from the beginning till the end how it works. First year, second year, third year. First year, how much grant did you receive, sir? 6 lakh. Yes, no? 600,000. So that is your journal entry you will pass for the first year. So for second year also, did you receive the grant? No, only one time offer. So second year will the same journal entry come? No. Third year again will the same journal entry come? No. So only first journal entry. First year this journal entry. Correct? Sir, grant is an income. Now the question is, this income should be transferred to P&L immediately or should we defer it? Here can we transfer it immediately? No, because condition will be satisfied over 3 years. Hence grant also will be transferred to P&L over 3 years. What is the journal entry to transfer any income to P&L, sir? Commission received. What is the journal entry for commission received, sir? Interest. Okay, interest received. What is the journal entry for interest received? Bank account debit to interest. Interest received as an income. Income will be transferred to SPL. What is the journal entry to transfer any income interest to P&L? Interest received account debit to SPL. Yes or no? Here grant you need to transfer it to SPL. So what will be the journal entry? Deferred government grant account debit. To what? Where will this be transferred off to? P&L. That is SPL. Entire 6 lakh. Oh no, those 6 lakh has to be amortized or deferred over how many years? 3 years. That means every year how much grant will you transfer to P&L? 2 lakh. That means every year you will write 2 lakhs, 2 lakhs. Like here. Same entry will come for all the 3 years like this. Okay? By the end of third year, this deferred government balance would have become 0. That's all it is. I have explained it in journal entry. I have given the solution in words. That's all there is. That's the only distinction. Fine? Instead of journal entry, you can reference write in words only if you're comfortable. Either ways, because you're solving in Excel and all, no? Fair enough. So doing journal entry in Excel, no, it requires formatting and all that stuff. So expressing in words a little easier. What you can write in words? First you will write what? Grant ka conditions, recognition criteria. Yes, if you want. Fair enough. If it comes for more marks, I'm just saying. First you will call out recognition criteria, or maybe let's read what they've said. The grant should be released over 3 years. What do they mean by word release? Released into SPL. This should be recognized in SPL over 3 years. That means 2 lakh is taken to SPL each year. That is what they are trying to say. Manageable? Alright? Okay, sir. 2 lakh has been released into SPL for the current year. Current year you would have recognized 2 lakh. No. Balance 4 lakh will be held in deferred income and recognized over the next 2 years. Because this one, second year and third year only, you will release 2 lakhs more. No? So 4 lakh will be still the balance. At the end of first year, deferred government grant account will still have a balance of 4 lakh. That will be released into SPL over the next 2 years. That is what they are trying to say. Is this okay? This is on your revenue grant. Any doubt if you have? I'll kind of wait up, else I'll move on. Easy? Online also? Easy? Excuse me. Yes, awesome. Alright, sir. We saw now revenue grant accounting. Next is what, sir? What is the other nature of the grant? Capital grant. Capital grant, this question is there. We will take up. Okay, they only asked a small bit of it. I will explain you the whole thing from beginning to end until the journal entry. So that will be easier to relate. Is it okay? Let's read this question and see how we can do this. An entity opens a new factory, underline the word new factory if you can, and receives a government grant of 15,000 in respect of capital equipment costing 1 lakh. Stop there, sir. Now you tell me what is the nature of this grant, revenue or capital? Capital. How can you conclude? Sir, the company opened up a factory and they purchased an equipment, capital equipment, worth how much? They purchased a machinery worth 1 lakh. Because they purchased an equipment, they have received a government grant of how much? 15,000. I mean, this grant is exclusively related to capital asset, no? Hence, this is a capital grant. Fine. So, this is a capital grant. It depreciates all the plant and machinery at 20% on a straight line basis. So, they are depreciating this on a 20% straight line basis means, can I say useful life is 5 years? Because every year you are calculating 20% depreciation means, first year 20%, second year 20, third year 20, fourth year 20, fifth year 20. 5 times if you add 20, how much would have been depreciated, sir? 100%. Meaning the life of this, useful life of the asset, indirectly they are telling is 5 years. Manageable? Everybody? Okay. Show the treatment or show the statement of SPL and the statement of financial position extract in respect to the grant in the first year under both the methods. For capital grant, there are 2 methods. Under both the methods, they are asking. We will see the SPL and balance sheet and all later. First, we will understand the journal entry. Once you know the journal entry, all this easily you can manage. Hence, I will just give you the journal entry here. Okay? Not required for your examination, this for your knowledge, so that it will be easier for you to answer things. Question number 17 ka solution I am writing. Alright, sir. First, capital grant. This is okay. Capital grant can be accounted under 2 methods. Method number 1 is asset cost reduction method. First name is what, sir? Asset cost reduction method. So under this, I will tell you the journal entry. Once we do this journal entry and this problem, we'll go back to the chart and read the words again. It should make sense then. Alright. So I'll give you the journal entry. Sir, what is the useful life here? We figured it out? 5 years. That means I will give you the journal entry for all the 5 years. Year 1, year 2, year 3. You can just observe, no need to write because all this is not required. This is just to strengthen your understanding. Once you know journal, aram se you can write anything in words you can express. That is the reason. So I'm giving you the funda. Alright, so journal entry for all the 5 years. First, what happened in the first years? Or what is the first transaction happened? The company purchased an equipment. Yes. What is the journal entry for equipment purchase, sir? Equipment purchased. Property, plant and equipment account debit. Yes, no? To cash or bank. Generally the payment will be made through banking channel. So I'll write it as to bank account. Okay. How much did you buy the equipment for, sir? 100,000. So far, okay? Second year also you purchased equipment or only first year only? Only first year. That means this journal entry will only come in the first year. It will not come in the other years as such. This is your first journal entry. Manageable? Sir, the moment you purchased this asset, government gave you something. What did they give you? They gave you a grant of 15,000. Money you received 15,000. So if you are receiving the grant, means your bank balance will increase. Yes, no, sir. So bank account debit how much? 15,000. Got it? Because you have received 15,000 in your bank account from the government. What is the method name? Asset cost reduction method. Why did the government give you this grant, sir? Because you purchased this asset. Yes or no? Now honestly you tell me, sir, to buy this asset, how much cash or how much money you spent? 1 lakh you spent. Government gave you how much in return? 15,000. Now honestly you tell me, how much did you actually spend for this asset? 1 lakh or 85,000? 1 lakh you spent and 15,000 you got from the government, no? So effectively, what is the cost of this asset for you? 85,000 only. Yes, no? That is the first method. The grant that you are receiving, no? You reduce it from the cost of the asset. Hence the name asset cost reduction method. Your books may not use this term. I am using it for your simplicity purpose. Right now, in Indian scenario, we call this as asset cost reduction method only. That means what will you credit? Can you tell me? Bank account debit 15,000. What should I credit here? The name is asset cost reduction method. That means I will credit which asset? The asset relating to this, which is what? PP, the equipment. So I will write bank account debit to PP 15,000. That's all is the fund. Manageable. So far, okay? You receive the grant for all the 5 years or only once? Only the first year you receive. That means will this entry come in the other years? Huh? That's all is the fund. Manageable. Alright, sir. Can I go for the next entry? Sir, you purchased an asset. You are using the asset means will you calculate depreciation? For depreciation, yesterday's session, let's see how well you have revised. There should be 2 characteristics for depreciation. What are those? 1, DA should be positive and useful life should be known. Here useful life is 5 years. And DA, sir, have they given residual value? Anywhere have they given residual value? If they don't give residual value, we'll take it as what? 0. And how do you calculate DA? Carrying amount minus the residual value. So here carrying amount is 1 lakh minus 15,000, which is 85,000. Carrying amount is 85,000. Residual value is 0. That means the DA is obviously positive, no? So will you calculate depreciation? Very much yes. So what is the journal entry for depreciation, sir? Depreciation account debit, alright, to what? I have told you most common method of accounting depreciation is what, sir? You will not credit asset account, you will credit something known as provision for depreciation account. Yesterday's session we looked at this, yes? Okay, can you tell me what will be the depreciation, sir, under straight line method? Cost of the asset. You bought the asset for 1 lakh. When you received the grant, you credited the asset, no? Sir, asset has debit balance. If you credit it, what will happen to its cost? It will reduce. That means, is the cost of the asset 1 lakh? No, cost of the asset is 1 lakh minus 15,000. This is your cost of carrying amount minus residual value. How much is residual value? 0. Divided by useful life, which is 5 years. Okay? So calculate this, sir. 85,000 divided by 5, you do? 85,000 divided by 5, you're going to get 17,000 as such. Got it? Or you can apply like this also. They gave you a depreciation rate, no? How much depreciation rate they've given? 20%. Yes? Or if you want, you can calculate like this also. 1 lakh minus 15,000. This is your cost of the asset. Multiplied by 20%. You'll get the same answer. Yes? This is okay. That is your journal entry for depreciation. So depreciation you will account only 1 year or all the 5 years, sir? All the 5 years. That means, will the entry change? No. Same journal entry with same amount. So that means second, third, fourth year column also I will write the same thing. Got it so far, sir? Okay. That's all. And depreciation is an expense. Where will the expense be transferred off to? SPL. So the journal entry will be SPL account debit to depreciation. Same journal entry for same amount. 17,000 in all the years. Done. This is your end-to-end journal entry for the first method. Okay. Now in the question they are asking, tell me because of this grant in the first year, how my P&L and balance sheet is going to get affected. Can you tell me by looking at this journal entry? Tell me, sir. Here, look at only the first year column. Anything that is affecting my P&L, what is the only component that is going to P&L here? Depreciation. Yes or no? Depreciation is an expense. Check. Have they shown now? In statement of P&L, they are showing a depreciation of 17,000. This is the only funda. Easy. So the SPL is done. Is it anything affecting OCI section? Nothing. You have not done any revaluation and also OCI is irrelevant. I mean, straight away next I can go where? Balance sheet. Yes. Now look at your journal entry. So tell me in balance sheet, first year, what will be the value of the asset? You bought the asset for 1 lakh. When you received the grant, you credited the asset by how much? 15,000. This is your cost of the asset, no? Correct? So original cost of the asset is 85,000, can I tell? Yes. Will you show cost in the balance sheet, sir, or will you show after deducting depreciation? After deducting depreciation. Yes, now what is the depreciation for the first year, sir? Depreciation for the first year is 17,000. That means what is the carrying amount of the asset? 85,000 minus 17,000, which will be 68,000. So 68,000 is the asset ka carrying amount which will be shown in balance sheet. Yes or no? That is what they've shown here. Check. Under non-current asset, they've shown property, plant and equipment at 68,000. That is your impact under the first method. Fine. Straight away I could have done here also, but you would have not got the treatment. Now when you know the journal entry, easily you can kind of tie out the stuff. That is the reason I put up the journal entry as such. Okay. So this is the first method. Easy. What is the first method? Whatever grant you have received, reduce it from the cost of the asset. Hence the method name is asset cost reduction method. There is one more method and companies are free to choose whichever they feel comfortable with. Okay, I'll show you the journal entry. Same setup. I'll do it for method number 2. Method number 2. Method number 2 is deferred income method, we'll call it. Second is deferred income method. Same setup, maybe we'll do it again. Particulars. Year 1. Year 2. Year 3. Year 4 and year 5. Alright, sir. What is the first transaction that happened here, sir? The company purchased the asset. What is the journal entry for asset purchased? PP account debit to bank. You purchased the asset for 1 lakh. That happened only in the first year. So second year, and all no entry, no? Okay, that is easy now. Yes. After you purchase the asset, you receive the grant, no? When you receive the grant, what entry you will pass? Bank account you will debit. That you know of, which is 15,000. Can you credit the PP now? Is the method name asset cost reduction method? No. Method name is what? Deferred income method. That means this 15,000 now you will park it in a dummy account known as deferred, or you will park it. Why am I saying dummy? Is eventually it will get closed. That's the reason. Okay. To deferred government grant account you can call it, or you can call it as deferred income account only. Doesn't matter. You will park this grant in a separate account known as deferred government grant. Instead of crediting fixed asset, you will credit deferred government grant. Okay, second year also you receive the grant. No, only in the first year. So this entry, will it come in the other years? No. Sir, what is the funda here is? Deferred. Name is what, sir? Deferred income method. So grant is anyway income, no? So here, one moment, just check, sir. Why did you receive the grant? Because you purchased a fixed asset or a property, plant and equipment. Yes, no? That fixed asset will stay in your business for how many years, sir? That fixed asset, you will use it for how many years? 5 years. Because that fixed asset only you receive the grant. No. That means this grant will be transferred to P&L over 5 years. That's all it is, the fund. Okay. You will treat this as deferred income and transfer to P&L over 5 years. Why 5 years? Because useful life of that PP is 5 years. If the useful life of the PP was 10 years means, I would have transferred this grant to P&L over 10 years. That's all is a fund. So what is the journal entry to transfer grant to P&L, sir? It will be deferred. Transferring any income to P&L. What is the journal entry? Income account debit to SPL. So a journal entry will be deferred government grant account debit or deferred income account debit to SPL account. This 15,000 of grant, no, you have to defer it over how many years? 5 years. That means how every year how much will you transfer? 3,000. So that means this journal entry you will pass for 3,000. Only in first year this journal entry will come up. No, it will come for all the 5 years. Will the amount change? No. Amount also same entry for the same amount will be passed for all the 5 years as such. At the end of 5th year, this deferred government grant balance will become 0. That's all. Okay. This is your second method. Did you understand? Now they are asking in the first year, if you follow second method, what will be your impact in P&L and balance sheet? Can you tell me the impact, sir, by looking at the journal entry? Okay, in fact, one more is there over here. You have to calculate depreciation. So asset is there means depre is also there. No? Let's also calculate of depre maybe. What is the journal entry for depre, sir? Depreciation. Depreciation account debited to provision for depreciation or accumulated depreciation. Depreciation account debit to provision for depreciation. Now can you tell me, sir, what will be the value of depreciation? Cost of the asset is how much? Originally you purchased for 1 lakh. You received the grant of 15,000, but did you reduce that 15,000 from the cost of the asset? No. You are treating that as deferred income. That means what is the cost of the asset now? 1 lakh. Manageable. So cost of the asset is 1 lakh. What is the salvage value? 0. Useful life is how many years? 5 years. Okay. So that means what will be our depreciation every year, sir? 20,000 per annum. In the previous method, depreciation was 17,000. Now it is 20,000. That means this entry you will pass for all the 5 years with the same amount. 20k, 20k, 20k. All of you okay? Alright, depreciation is an expense. Expense will be transferred off to SPL. That entry I'm leaving it. It's okay with you? Yeah? I think that you can manage. Anyway, past year, no? Now tell me the impacts, sir. How and all this particular or these transaction is affecting your first year P&L and balance sheet. 1. Depreciation is an expense. Will it be transferred to P&L? Yes. Check in the question, have they transferred depreciation 20,000? SPL depreciation is 20,000. That's all, huh? No. Grant, you're treating grant as a deferred income. That means every year you're transferring grant to P&L, no? First year, how much grant got transferred to P&L as an income, sir? 3,000. So depreciation is an expense for, you'll have an expense of depreciation for 20,000. You will have an income for 3,000. Look at the net impact. Income, expense is 20,000. Income is 3,000. What is the net impact on your P&L? 17,000. In your previous method, how much expense got transferred to P&L? 17,000. Whether you follow first method or second method, final impact on your P&L is same. Just the way of presenting it will be slightly different. And companies are free to choose this. Done? So if you follow second method, you will also have another income, deferred government grant income, which is $3,000. Since this is an expense, they have denoted in bracket. Since this is an income, they have denoted in positive number. Got it up? Fair enough. Similarly, now can you tell me PPE carrying amount, sir, at the end of the 1 year? Original cost is 1 lakh. Depreciation is how much in the first year, sir? 20,000. That means the carrying amount of PPE that will come in balance sheet is 80,000. Check, have they shown PPE at 80,000 and 80,000. Okay, that's all? No. One more is there. What is that? That's the reason I showed you the journal entry. Sir, when you receive the grant, you park that grant in which account? Deferred government grant, no? So it's a simple funda. Any account that has a balance goes to balance sheet. Yes. This grant, check, you credited this grant by how much, sir? 15,000. When you received this deferred government grant, but credited by 15,000. How much did you transfer to P&L already in the first year? 3,000. That means what is the balance in this deferred government grant, sir? 12,000 credit balance. Yes or no? That means this should come on the asset side or liability side? Under the liability side. Okay. Now one important thing. The first topic of funda is important here. You remember when I did introduction to public accounts, I spoke about current liability and non-current liability. Can you tell me what is a current liability? Something which is payable or receivable within 12 months from the balance sheet date is a current liability, or is a current asset or current liability, doesn't matter, yes? Or it should be paid within operating cycle. Your operating cycle, they have not told anything. Tell me, should I book this or should I show this 12,000 government grant under current liability or non-current liability? According to you, should I show this 12,000 government grant as a current liability, non-current liability, or both? Both. Why? Sir, this 12,000 grant, within next year, how much are you going to recognize, sir? 3,000 you recognize in the current year. Next year, immediately, how much you going to recognize? 3,000. That means this is in a way getting settled or closed within 3,000 of, though the grant has a balance of 12,000, 3,000 of that will be transferred to P&L within 12 months. That means 3,000 will be shown. Of this 12,000, 3,000 will be shown as a current liability. Balance 9,000 will be reflected as a non-current liability. Did you get it? So always when you see something, something deferred over 5 years, don't automatically say, oh, non-current liability. No. Because though this is deferred over 5 years, every year you're transferring something to P&L. No. That means this of this 12,000, 3,000 is getting transferred to P&L within next year, meaning within 12 months. Hence, that portion you should treat it as current, and the balance you will treat it as non-current. Balance is nothing but 12,000 minus 3,000, which is 9,000. Got it, huh? This they should have shown. Can we look at this? Have they shown it? So check. 1 minute. In your non-current liability, under non-current liability, they're showing government grant of 9,000. Under current liability, they're showing 3,000. That is the impact they're showing. Fine. So with the journal entry, I feel understanding will be easier. That's the reason I put it. Okay. Okay. Online people also, any confusion or got it? Any confusion in any of the portion I have shown here or got it? Got it. Awesome there. Alright. So if you have got this, I can move on to the next. Okay. I'll do a thing now. I'll just come back to the chart. I'll show you the chart. Now we'll read this and see if it makes sense to us now. I think revenue grant is okay, right? Revenue grant is okay. Somebody is asking, sir, why is it a liability? Sir, government grant will always come with some conditions. If you don't comply with the conditions, what will happen? Government will take back that money. Meaning, company has an obligation, meaning they have a liability to pay to the government. Hence, we show it as a liability. Is that okay? That's a very good question. Hence, we show it as a liability. Did I answer your question, sir? Okay. Alright. Now, let's read this. There are two ways in which you can account capital grant. One is what? Asset cost reduction method. Second one is deferred income method. If you follow asset cost reduction method, sir, cost of the asset will reduce. Do you agree? Because under asset cost reduction method, when you receive the grant, what journal entry will pass? Bank account debit to asset account. Hence, the cost of the asset will reduce. If the cost of the asset reduces, will the depreciation be same? Depreciation also will reduce. So what is the journal entry when you pass when you receive the grant? Bank account debit to that respective asset account. Normally, that asset will be PPE, but it could also be intangible asset also. Fine. Hence, I have not used the word PPE, I have used the word asset. So far, good. Now, is this making sense to you now? First case, refund portion, don't worry. First 3 points are okay. Now, let me come to the other method. Second method is what? Deferred income method. So, if you are following deferred income method, when you receive the grant, what journal entry you will pass? Bank account debit to deferred government grant account. Yes, no? That means, are you touching or are you crediting PP here? No. That means, will the cost and depreciation of the asset get affected here? Or? No. Since you are not touching the asset, cost and depreciation of the asset is not getting affected. That is a pointer here. And what is the journal entry you will pass when you receive the grant? Bank account debit to deferred government grant or bank account debit to deferred grant income, whichever way you are comfortable, you can show. This is your journal entry. Manageable. This is your first section. Everybody, is all this clear now? Now, we have one more section, that's all. Sir, suppose you don't comply with the condition, what will happen? You'll have to give the grant back to the government. Yes, no? If the grant becomes refundable, then what will happen is what they're saying. That is the next section. Now, you tell me, sir, without looking at the chart, that answer, if you had followed asset cost reduction method and if you have to refund the grant, what journal entry you will pass? You tell me. If you follow asset cost reduction method, when you receive the grant, what journal entry you will pass? Bank account debit to asset. When it is refunded, ulta entry. That means the journal entry will be asset account debit to bank account or government grant payable account. If you have already paid it, you will credit to bank. If it is still payable, you write to government grant payable account. Yes, sir? Is it okay? Yes. Now tell me the impact, sir. When you receive the grant, cost of the asset reduced, depreciation reduced. When the grant becomes refundable, cost of the asset will increase, depreciation also will increase. Ulta impact, that's all. Fine. And the journal entry for grant refundable is also what? Asset account debit to bank. If you have already paid the money to the government, you will credit bank account. If you are yet to pay, you will write GG payable, as in government grant payable account. One liability you will create. Is this section okay with you? There is no problems for this. If you want, I can make up one problem, or if you have understood this, I can move on. This section, they are not asking any problem as such. Is this okay? Comfortable? No? Same, whatever I have written here, I have written the ulta entry. That's all it is. Online also okay? With both the section? Grant refund portion? Yes. Alright. Now, this is important. Here they are asking small MCQ questions. If you follow deferred income method, okay, let me do one thing here. For this one, no, let me take up a problem. It will be easier. I'll not construct a new problem. I've already done one problem, remember? Here I passed the journal entry. That only I will create one scenario and see if we can prove this. Here we'll take up this scenario only. 1 minute, hang on. Excuse me. Let me recreate that scenario. Unnecessary information I'll cut off. Let me modify that scenario, okay? You're following deferred income method. I'll write one more scenario. Suppose grant became refundable in third year. Grant, you remember one problem we solved, no? Just now one problem, journal entry. That scenario only I'm modifying just to understand this. Because this maybe you can understand it a little better with numbers. That's the reason I'm just modifying, okay? Suppose grant becomes repayable in year 3 beginning. If that is the case, means I am giving you the journal entry. Yes? Let's look at that. Okay, let me run you through the whole scenario. Sir, first year you purchased an asset for how much value? 1 lakh. So that means this is a journal entry. That will not change. After you purchased the asset, how much grant did you receive? 15,000. What is the journal entry? Bank account debit to deferred government grant. This grant was related to which asset? PP. That PP you'll use it for how many years? 5 years. That means this grant also you will amortize over how many years? 5 years. That means how much you will transfer to P&L every year? 3,000. Is it okay? Things were smooth till second year. Third year beginning, government had put some condition. You did not fulfill that conditions. If you don't fulfill the condition, what will the government do? They will ask the money back. Correct? Alright? That scenario, I'm asking you to pass the journal entry. Can you give me the journal entry for that? If the grant becomes refundable, what will be the journal entry? When you receive the grant, what journal entry you pass, sir? Bank account debit to deferred government grants. When it is refundable, ulta entry. Correct? So what is ulta entry then? Deferred. That's okay. I'll just cut off this only. Deferred government grant account debit. Correct? To what, sir? To bank account. If you have already paid, you will credit bank. You are yet to pay means you will write GG payable, as in government grant payable account. So far okay? The question to you is, amount can I write? Which year? First year the government grant got refunded. Which year you have to refund this grant? So third year. So first year anything? No. Second year anything? No. Third year. So how much grant did you receive? 15,000. So how much you need to refund? 15,000. So can I pass this journal entry, or can I write deferred government grant account debit to bank or GG payable 15,000? Can I do it like this? Perfect. I can't do it like this. Why? Sir, check. Do you have a 15,000 balance in your government grant? No. When you received the government grant, it had a balance of 15,000. At the end of first year, how much from deferred grant you transferred to P&L? 3,000. First year you transferred off 3,000. That means it had a balance of 15,000 credit. How much you transferred to P&L? 3,000. This is for the first year. Yes, no? Second year again you transferred from deferred government grant to SPL. How much? 3,000. That means what is the balance in the deferred government grant, sir? Do you have 15,000 balance, or how much balance it has? Only 9,000 balance is there. If it has only 9,000 balance, can you debit it by 15,000? No. It has 9,000 credit balance. So the maximum you can debit is how much, sir? 9,000 rupees. So you can't debit this by 15,000. You have to debit this by 9,000 rupees. Did you get this? But is the journal entry matching? Should you have to repay to the government 9,000, or should you have to pay 15,000? 9,000 you are debiting. You are crediting 15,000. Is the journal matching? No. That means you have to debit something by 6,000. Correct? No. Where did this deferred government grant go, sir? Where did the 6,000 go to? SPL. That means you will debit what? SPL account debit arrived as balance. This is what you need to do here. Did you understand this scenario? If I had orally spoken, I thought you may not understand, hence I just modified the scenario. Comfortable? Online also respond, this they're asking, this is important. Any doubts from your end? Or can I modify the scenario just to make sure for my tasalli ke liye whether you have understood it properly? Suppose grant, or somebody is saying, okay, no problem. So somebody is saying repeat, no problem. I'll modify the scenario and we'll see. Suppose grant becomes refundable in 4th year beginning. Then, suppose grant becomes refundable in 4th year beginning. Then what will happen? So when you received the grant, what journal entry did you pass? Bank account debit to deferred government grant. When it is refundable, ulta entry. So the entry is what? Deferred government grant account debit to bank. If you have already paid, you will credit bank. If you are yet to pay, you will write government grant payable. So GG payable, no problem. You have to pay 15,000. Credit portion is clear. Yes, no. But can I debit deferred grant by 15,000? No. Why? When you receive the grant, no, this deferred government grant. I'm writing here again, once again. Deferred government grant. When you receive the grant, this deferred government grant had a balance of 15,000. That's the reason you wrote the entry as bank account debit to deferred government grant. Yes. First year, how much did you transfer to SPL, sir? This deferred government grant means this is a deferred income. Deferred income means where it will go, sir? P&L. You will not transfer this 15,000 in one shot to P&L. You will defer it over 5 years. So when is the grant repayable? 4th year beginning. That means till 3 years, scenario were smooth. Yes, no? That means for 3 years, you have transferred this grant of 3,000 rupees to P&L. Because this 15,000 has to be amortized over 5 years. So that means every year, how much will you transfer to P&L? 3,000. So first year you would have transferred 3,000. Second year again you would have transferred 3,000. Third year also you would have transferred how much? 3,000. So what is the transfer entry, sir? Deferred government grant account debit. This deferred government grant has a credit balance. If you keep on debiting, what will happen to its balance? Its balance will go on reducing. How many years have you transferred this grant to P&L? 3 years. That means 3 times you have transferred this to P&L. Correct? That means what is the balance in this deferred government grant now? 6,000. What balance it has? 6,000. So far okay? That means now what entry can you pass? The entry for deferred government grant repayable is what, sir? Deferred government, if the grant becomes repayable, then the entry is deferred government grant account debit to bank or GG payable. Yes. GG payable is 15,000. But can you debit deferred government grant by 15,000? No. How much balance it has? Only 6,000. That means you can debit this only to the extent of 6,000. How much shortage is there? 9,000. Where did this 9,000 go to? From deferred government grant, each year, where did you transfer this to? P&L. That means you will write what? SPL account debit arrived as balancing. This is the entry. Fine now. This one case study is there. Let's see. So far, okay? That is what I have written here in the charts. Now let's go back to the chart, see if it makes sense to you now. 1 minute, it's loading. Yeah. Okay, grant income is transferred to P&L in proportion of depreciation charge. Yes, based on asset ka useful life. Because you charge depreciation based on asset ka useful life only, no? In that proportion, you transfer it to P&L. That is okay. If the grant becomes refundable, then what you have to do, sir? Carefully read this, see if it makes sense to you. Then first adjust the deferred, then first adjust that grant repayable with deferred income, and the balance you adjust with SPA. Whatever balance is there in deferred government grant, now first adjust the refundable portion with that. If there is any shortage, for that shortage you use what? SPA. So what is the entry for this scenario? I have written the entry here because I had a little space. Deferred government grant account debit, SPL account debit to bank or government grant repayable. This is what I've written. Now is the wordings in charts making sense to you? Everybody? If you understood this, all the concepts relating to IAS 20 at F7 level is done for. There are more actually, but at your level only this much is covered, so only that much I'll take. Whatever is there, we'll spend that much. That's sufficient. Yes, online also. Quick response. Okay, they're saying yes. Alright, concepts are done. Few questions we have. Fadafat, can we take it up? So we are done with 16, we are done with 17. And then I think 1 minute, let me find the other one. Then we have, where is the next question? Question number 18. Let's take up question number 18. Alright. A manufacturing entity is entitled to a grant of 3 million. Sir, underline the word entitled if you can. Is entitled means did they already receive it or they are yet to receive it? They are entitled to, meaning they have a right to receive it, but they have not yet received. Okay, now they have a right to receive $3 million for creating 50 jobs and maintaining them for 3 years. Okay, now we're looking at this. You tell me, sir, revenue grant or capital grant? Revenue or capital? He's saying revenue. Yes. Others also feel revenue only. Why revenue? Sir, did you purchase any asset here? Did you receive the grant related to capital asset? No. Anything which is not a capital grant becomes what? Revenue grant as such. Okay, so that means this is a revenue grant as such. Got it? Revenue grant means you will transfer this grant where, sir? To P&L. Correct? Now, for revenue grant, there are no two methods. Correct? Now, first of all, revenue means, sir, you're paying 50 jobs, you're creating means you're creating 50 jobs, you're paying salary. Salary you will show in balance sheet. Or it's an expense comes where? In P&L. So that means for revenue grant and all, there is no asset cost reduction method. There is only what? Deferred income method. Alright, now the question to you is, should I transfer this entire grant to first year P&L? Can I transfer the grant to first year P&L? No. Why? Because the government told, I will give you a grant provided you create 50 jobs and you maintain all those 50 jobs for how many years, sir? 3 years. That means there is a condition here. Condition will last for how many years? 3 years. That means the grant should be amortized to P&L over 3 years. So this grant of $3 million should be amortized to P&L over 3 years. That means, can you tell me how much is the grant income in SPL, sir? Grant income to be recognized in SPL. You are entitled to a grant of $3 million. This $3 million you have to recognize over 3 years. That means every year you will recognize a grant of how much? $1 million. So far, okay? Okay, let's read further. 1.5 million is received when the jobs are created, and the remaining 1.5 million is receivable after 3 years. So government is saying, I'll give you in 2 installments. If you create, when you create 50 jobs, I will give you 1.5 million, meaning 50% of the grant. If those jobs are still there for 3 years, all the 3 years, at the end of 3rd year, again I'll give you 1.5 million. So that means total grant for you will become 1.5 plus 1.5, which will be $3 million. Okay, provided that the 50 jobs are still in existence. Okay, the entity creates 50 jobs at the beginning of first year only. So they become full Josh. 1.5 million they're getting, no. Fatafat they hired off, left, right, center. At the beginning of the year only, sir. Year 1 only. That means the moment they create a job, what will happen, sir? The grant will be received. Yes, no? And moreover, the grant is not necessarily to be received. What is the funda here? It's not cash-based accounting. What is the 2 recognition criteria for government grant? There should be a reasonable assurance that you will receive the grant, and there should be a reasonable assurance that you will fulfill the conditions. The moment when that reasonable assurance comes, you will start accounting. But practically, we'll do the accounting on a cash basis. Just for your reference, I'm saying. Because we don't trust the government now. They'll say, we'll give you. They may not eventually pay us. So practically, we may do cash basis accounting. But as per IAS, you can do the accrual basis, not a problem. Manageable? Alright. So we have already created jobs in the first year only. And there is a reasonable assurance that this level of employment will be maintained. So we are saying for all the 3 years, we'll maintain. Got it? They are saying, what is the deferred income balance at the end of first years? So if you create 50 jobs, then the government will give you a grant. How much grant will they give you? 3 million or 1.5 million? Government told, when you create a job, I'll give you 1.5 million. If you maintain those jobs for 3 more years, I'll give you 1.5 million more. That means, what is the journal entry for, sir? First journal entry will be bank account debit to deferred government grant. Yes, sir. How much did you receive? $1 million, 1 million. Correct? Correct, sir? Or 1.5 million rather, no? Because you would have received 1.5 million from the government. 1.5 million, 1.5 million. Can I transfer entire 1.5 million to P&L? No. So you don't have to consider 1.5 million. What is the total grant, sir? 3 million. This 3 million grant should be amortized or deferred over 3 years. That means every year, how much you can transfer to P&L? 1 million. Correct? No. So that means, what is the second entry you will pass, sir? This grant you will defer or you will transfer to P&L. Deferred government grant account debit to SPL. How much will you transfer to this in year 1? Okay. They only ask the first year, hence I'm only concentrating on first year. First year, how much can you transfer to P&L, sir? Only 1 million. That's our working here. No? That's what we have written here. Every year, you'll transfer 1 million to P&L. Got it? So how much grant did you receive? 1.5 million. How much did you transfer to SPL? 1 million. Is there any balance in deferred government grant? Yes. How much balance is there? The balance in that deferred million is 0.5 million. Correct, no? 1.5 million credit, 1 million debit. So what is the balance? 0.5 million. 0.5 million or $500,000. Correct? Sometimes they will give a million, sometimes they will give a thousand. I mean full number. So that is what they asked. Here it's a fill in the blank question. So the answer is $5 lakh or 0.5 million. Done? They've explained it in words. I've just put it in journal entry as such. Okay? You just check both, whatever you are comfortable and accordingly write. Fine. Examination, I would suggest wordings. Moreover, all this will come as an MCQ questions where an explanation may not be required. Yes? Alright? Again, okay, no worries. What is the total grant you will receive from the government, sir? 3 million. There is a reasonable assurance that you will receive the grant and there is a reasonable assurance that you will fulfill the conditions. That means, can you recognize the grant? Yes. Does this grant has come with any conditions? Yes, it has come with a condition as what? You have to maintain the job for how many years? 3 years. Since the condition is going to last for 3 years, grant income should be deferred over 3 years. So total grant is 3 million that will be recognized over 3 years. That means every year grant income you will transfer to P&L worth $1 million. Fine. But government is giving you grant in 2 tranches. First of this 3 million, no, 1.5 million, meaning 50% they will give you when you create 50 jobs. And if you maintain those 50 jobs for 3 more years, then you will get the balance. So first year only you created 50 jobs. That means the government will give you 3 million ka 50%, which is 1.5 million. Fine. So the journal entry you will pass is bank account debit to deferred government grant 1.5 million. Entire 1.5 million can you transfer to SPL? No. Maximum amount you can transfer to SPL is how much? Only 1 million. So the transfer entry will be deferred government grant to SPL 1 million. They are asking you what is the balance in deferred government grant. You credited deferred government grant by 1.5 million. You debited it by 1 million. So what is the balance? 0.5 million or 5 lakh or $500,000. Is it okay, Charan? Yes. Okay. Awesome. So question 18 is done for. Let me move on to the next one then. Okay. One last question for the standard. Not for the day. Don't get excited. Only for this particular standard. Okay. Yeah. All right. On 1st January 20X1, S received 2 million from the local government on a condition that they will employ at least 100 staff each year for the next 4 years. What sort of a grant, sir? Revenue or capital? Revenue grant. Because you did not purchase any asset, no. You are getting grant for hiring some employees. And you have to maintain them for how many years? 4 years. I mean, does this grant have any condition? Yes, the condition is spreading over how many years? 4 years. That means the grant also you should recognize over how many years? 4 years. That means, can you tell me how much grant will be transferred to P&L? Grant income to P&L, can I write? Grant income to SPL. Though the grant is $2 million, this you will recognize over 4 years. That means how much will you recognize in SPL each year? 0.5 million. So far, okay? This is your base data. Let's see what they are asking. On this date, it was virtually certain that S would meet the requirements. So they are saying recognition criteria is satisfied. However, 1 minute. Check the date you receive. Sir, here first of all, what's the first word only they are saying? S has received the grant. So there is no installment here. Government has already given you 2 million grants fully. And as on which date? 1st January 20X1. That means, tell me, sir, what is the journal entry you will pass? Maybe we will do it with journal entry only, so that it will be easier. On 1st January 20X1. Yes, you received the grant. When you receive the grant, what journal entry you will pass? Bank account debit to deferred government grant account. Or can I do it as year columnar format? Is it okay? Year 1, year 2, and how many years is the condition? 4 years. No? So we'll have it as 4 columns here. Year 1, year 2, year 3, year 4. Done. So first year you receive the grant. How much? 2 million. So this entry will only come in the first year. No? Second year, third year, fourth year, it will not come. Okay, I'll not write the dates here. I'll just write it as entry number 1. Okay. So this deferred grant, you will defer it over how many years? 4 years. That means every year you have to transfer from deferred government grant to where you need to transfer this to. So deferred government grant account debit to SPL. How much you will park it or put it in SPL each year? 0.5 million. Basically 2 million you will amortize over 4 years. So 0.5 million you will recognize each year. So 0.5 million. Done, sir? So far good? Okay, so let's see what happened there. On 1st January 20x2, okay, this date is important. When did you receive the grant? 1st January 20x1. The moment they give you January, no sir, you can be sure that most probably year will end on December. So they follow in calendar year, Jan to December. So 1st January, so this year will be 1st January 20x1 to 31st December 20x1. This is your first year. Next, they have given 1st January 20x2, that is second year beginning. Second year beginning, something happened. Due to an economic downturn and reduced customer demand, S no longer needed to employ 100 staff. The conditions of government grant required full repayment. Government told you create a job, maintain it for 4 years. Because of that, I have given you a grant of 2 million. But here, will the company keep those 100? They already hired 100 people. Will they keep it? They're saying conditions are bad. Corona, COVID has happened. So they started firing the employees. If you fire the employees, what will the government tell? Hey macha, please give the money back. Yes or no? When did this happen? Year 1, year 2, year 3, year 4. Which year? Year 2. That means second year I will not pass this entry. I'll cut off this. Is it okay? Because second year you need to refund. No? They are asking, now check sir. What entry should be recorded in the financial statements? You tell me the entry first, then we'll look at the option. What is the entry you will pass when the government grant is getting refunded? What journal entry you will pass, sir? When you receive the grant, the journal entry is bank account debit to deferred government grant. When it is refunded? Deferred government grant account debit to what? To either bank. If you have already paid, it is to bank. If you are yet to pay, it will be government grant payable. One liability. Yes, no? Fine. Which year, sir? First year, second year? Second year. How much grant you received? 2 million. They said grant is repayable. Have they sold grant is repayable only to the extent of 1 million, 1.5 million like that? Have they told? No. If they don't tell the value, that means entire grant you need to refund. That means you need to pay the government how much? 2 million. But can you debit deferred government grant to the extent of 2 million? No. Because do you have 2 million balance in deferred government grant? No. Initially you had 2 million balance. How much of it you transfer to SPL? 0.5 million. So what is the balance in that deferred government grant? 1.5 million. So you will debit deferred government grant to the extent of 1.5, and for the balancing figure, what will you debit, sir? SPL account debit 0.5 million. So they are asking the journal entry. Okay. Check which option has this journal entry. Reduce deferred income by 0.5 million. Is this the only option? No. Option is what? Reduce deferred income by 0.5 million. Recognize loss in financial statement to the extent of 500,000. Loss in financial statement means they are talking about SPL. So how much loss you will book it in P&L? 0.5 million. So that means the correct answer is option B. Now, GG payable have not passed. It is okay. Fine. That is it. So option B is the right answer based on the journal entry. If you want, you can write parallelly this journal entry for your reference if you require. If you have got it, absolutely okay. So if you have got it, that's all with respect to this particular stand. Thank you.